This meeting is being recorded.
Women in Africa face a substantial financing gap estimated at $42 billion. Studies have shown that for every dollar invested, female-founded startups generate 78 cents, while male-founded startups generate 31 cents. Bridging the gender financing gap could boost Africa's GDP by $316 billion by 2025. Good morning, good afternoon, everyone, and welcome to our first webinar of 2025, Why Africa Matters, Unpacking the Rich Potential of African Investments. This is the first MiDA Standard Bank webinar series of 2025, and in its second year. We're here today to have a bold, action-oriented conversation, one that goes beyond rhetoric and gets to the heart of the issue. We've spent years talking about why investing in women matters. We've heard the reports, we've seen the data, and yet, when it comes to actual capital allocation, the progress has been painfully slow. Here's the truth. Investing in women is not a favor, a charity, or a box to check. It's a business opportunity. The numbers don't have gender bias. Returns are returns. Growth is growth. And yet, capital still doesn't flow to women at the scale it should. So the real question we should ask today is, if the number makes sense, why are we still allowing unconscious bias to stand in the way? We have with us today key players in finance and investment, institutions that are shaping Africa's economic picture. And I'm going to challenge them to tell us not just what they're doing or what they've committed to, but what's working and what's not, and how we move forward from ambition to execution. So let's be direct, let's be open. And most importantly, let's leave this with real actionable steps that will shift the way capital is deployed across Africa. With that, let's dive in. My name is Yabsera Zode. I'm an associate director at MiDA Advisors. MiDA is a global investment advisory firm mobilizing capital and structuring innovative financial instruments for infrastructure and other large-scale transactions. And I am pleased to introduce our esteemed panelists today. We have Helian Gossard, alternative investment specialist at Riskura. With nearly 20 years of experience, Helian leads the alternative investment team at Riskura, a market leader in emerging markets like Africa and China, managing $200 billion in assets. As an expert in private equity, infrastructure, and private debt, Helian insights are highly sought after by industry bodies, top media outlets, and global investment forums. We look forward to having her valuable perspective on alternative investments and market trends. We also have Alex Saria, Chief Officer for Affirmative Finance Action for Women in Africa, AFOA, at the African Development Bank. With over 20 years of experience in financial services across sub-Saharan Africa, Alex has led transformative initiatives to close the financing gap for women entrepreneurs, securing over $2 billion in funding. His work has positively impacted hundreds of thousands of lives, driving women business growth in key sectors such as renewable energy, climate smart agriculture, ICT, industry, and trade and services. And we have third, Adiola Ukoa, covering manager for Nigeria at British International Investment, BII. With 20 plus years of experience in impact investing, deal structuring, and banking, Adiola has worked across leading financial institutions, including Rand Merchant Bank, Nigeria, Stanbank IBTC, and GT Bank. Now serving as a coverage manager for Nigeria at BII, she focuses on mobilizing capital for high impact sectors. Joining us as she shares insights and driving sustainable investment in Africa. I am very excited for this esteemed panels and what they have to share for us. So if you allow me, let's dive into the questions. So I have a question first to Alex, AFOA. If you can introduce AFOA for those of us who are not very familiar with it, and how does it address Africa's unique investment challenges and opportunities? Alex?
Yeah, no, thank you so much. Good afternoon, everyone. Good morning, wherever you are. It's really an honor to be here today with such an esteemed group of ladies from different financial backgrounds. And all of us are gathered here to around the issue of investing in women, which is not just important, but very urgent. I mean, I agree with you, Yepsira. Actually, the gap is now 49 billion, not 42 billion, from our recent research. And by 2030, if we've not closed the financing gap that women SMEs face, then we had the threat to lose $300 billion in GDP on the continent. So I would also like to take this moment to wish all of you a happy International Women's Month, and thank you for this opportunity to speak. So I'll tell you more about the Affirmative Finance Action for Women in Africa. It's a Women's Financial Inclusion Initiative by the African Development Bank, and it's a commitment and a core pillar to the African Development Bank's 10-year strategy, 2024-2033, that aims to ensure that all our projects benefit young girls and women. So the initiative is modeled around three pillars, the first being access to finance, and the second being technical assistance, and the third being enabling environment. So under access to finance, since we began the implementation of the FR initiative, we've managed to unlock up to $2.5 billion in financing through providing guarantees to partner financial institutions, through also leveraging our traditional instruments, your lines of credit, your guarantee instruments, your equity instruments, and trade finance to ensure that there's a proportionate carve-out of financing that goes towards women. But beyond financing, we've also provided technical support to financial institutions. Today, we're working with 185 financial institutions on the continent in 40 countries, and we're supporting them in building their capacity to serve this market and building products that are well suited for the women's market segment, and also supporting them in data collection and market sizing so that they could understand what the challenges are out there, and design initiatives that speak to the challenges out there, and also move further to the demand side and provide capacity building initiatives that can support women entrepreneurs become bankable and access finance. And on the enabling environment pillar, we've worked with a number of partners, for example, the UN Women, where we've supported women access supply chains, global supply chains through formative procurement initiatives. We've supported, we've also advocated for policy change in West Africa to ensure that women partake of economic opportunities, say in governments or global multinationals, and be able to access procurement opportunities in that space. So to date, we've managed to unlock 2.5 billion in funding, as I mentioned. We're on a mission to unlock up to 5 billion by 2026. And that is a far for you. Over to you, Ms. Spear. Thank you.
Thank you. Thank you so much, Alex. And you've touched on important aspects. And I want to go to Adiola and talk about our investors really hiding behind risk narrative. Many investors claim women-led businesses in Africa are too risky or too small to fund. And the different instruments and support that you mentioned, Alex, the guarantees to reduce risk, although some of it could be perceived risk, and also capacity building, right, to enable these women-owned businesses to be bankable. So I want to ask Adiola, if the data shows women-led ventures actually deliver higher returns and lower default rates, per my opening remark, so is it really about risk from your perspective, or is it more of a deep-seated bias towards women-owned businesses that really amplifies the risky sense and the too small sense in these different pipeline of opportunities that are women investments?
Thank you very much, Ifsara and Alex. Great insights and contribution from you in addressing what it is that you do at AFTB. I would say when it comes to investments, right, it's about capital allocation. And capital will always flow where there's a reward, especially when you have accessed the level of risk in the opportunity. The higher the risk, the higher the expected reward. So if we eliminate those concerns around risk, reward, and capital allocation, it begs to question that how does gender fit into this analysis? It does as a result of some level of bias, which you have alluded to into your opening remarks. It does because of the systemic challenges and with the traditional investment methods. In my view, based on what I've observed on the continent, the biases could be from the patriarchal system of the society, where you have gender stereotyping, say women should prioritize family and caregiving over running a business or professional ambitions. It could be from biases in the traditional systems of maybe inheritance and property laws, which favors men to own property, which automatically stifles entrepreneurial opportunities and independent women typically don't tend to have. It could also be from stereotyping that leads to a perception whereby certain fields, especially when it comes to science, technology, and maths, also used as the acronym STEM, is best suited for males. And that's also as an offshoot of traditional customs regarding educating the girl child. So biases do exist when it comes to that gap with female funding. And these biases tend to lead to either indirect or direct and indirect or directly leading to the funding gap with women-owned businesses. So those biases exist, whether it's patriarchal, whether it's traditional systems, whether it's stereotyping, and capital would always flow to where there's the right level of reward. The reward just has to be commensurate to the level of risk that one is actually taking in that investment opportunity.
Thanks, Adiola. I just want a quick follow-up on that. When we said the capital flows and follows reward, is it an issue of not having enough pipeline of women-owned businesses, women-led funds on the continent? Do you think the issue is not having the proper pipeline, real pipeline of investable opportunities?
Not entirely, Sarah. And I mean, there was a reason why I walked through those biases that we see. Those biases that, that I just tried to summarize actually lead to systemic challenges that is affecting the perceived inadequate pipeline. Those biases lead to underrepresentation of women investors. And when you have that underrepresentation of women investors, you find situations whereby decisions that should be made by female representation, the gender that is making those decisions, they are oblivious to those peculiar challenges that female entrepreneurs might be facing, which affects the allocation of resources. The underrepresentation of women making decision-making roles as a result of those cultural biases I spoke about. Decision-making marginalization, which is a bias that manifests itself in the representation of leadership roles, women in leadership roles, where men's voices are typically prioritized, undermining the woman's influence and contributions in critical decisions and policy making. And also there's also the systemic challenge regarding the access to network, which means women are having the less access, women-owned businesses, women entrepreneurs are having less access to influential businesses and networks. So I'll summarize to say that there is a real pipeline out there, but it will take some level of intentionality by investors, by society, in addressing those structural challenges that will support the allocation of capital to target gender investments.
Thank you. Thanks so much, Adiola. So going to Hillian, Ruskira has been vocal about the need for more gender lens investments and has worked to structure investments with this in mind. And from what you've seen, what radical intervention needs to happen now to make investing in women a mainstream financial strategy rather than an isolated impact initiative?
So I think for us, and the way in which we've seen the initiative and the way in which we see how the landscape can change, it always has been that women need to be the people who are allocating capital and investing in businesses. And that really, the way in which we participated in this landscape and being part of the African Women Impact Fund has been really at the back of that particular initiative and that way of thinking around how do we empower women. If we look at how the numbers play out, every time you give money to a female fund manager, they are more likely to invest in female businesses. But it's not really only that. If you go and look at the statistic that tells you that women are, of their disposable income, 90% of their disposable income will go towards investment into the future, in essence, investment into the education of their children, to the health of their children, into the nutrition of their children and families, versus a number of about 30 to 40% for men. If you look at the way in which women look at investment, they look at it in a very similar way. You will see them investing in things which invest into the future. They are very partial towards the healthcare sector. They're partial towards the education sector. They look at businesses that build towards a future that they see for their families and for themselves. So you don't only have the chance of diversifying your risk away from businesses with which only have only male people making decisions, which we all know the statistics tells you as soon as you have boards and decision makers which are more diverse and include women in real power positions to help make decisions, you have better investment outcomes and you have better decision making outcomes. You don't only have that, but when you put capital in women's hands, you get that particular multiplier, but you also get the multiplier of what they choose to invest in. They in turn choose to hire women who again, you get the throughput of another multiplier in terms of how those women then spend their income. So for us, what we really want to do is we want to try and as high as possible in order to make sure that you can see how capital flows to every level and every part of the financial ecosystem. And I have found, and I think what is true is that reality managers on the continent, then there is female-led asset managers, and that any program which has intentionality about targeting female asset managers will need to be able to look at earlier stage investment, where sometimes you'll find that investors will tell you they'll only invest in an asset manager who's on their third or their fourth fund. Any initiative of this kind will need to be able to invest in asset managers who are on their first or their second fund. And at Riskera, we've got a really, really long history of managing programs such as those, and to make sure that there's good, solid risk management around those things. Because what you'd find is you'd have women that have excellent investment skills, but this is going to be their first opportunity to run what is in essence a small business. And it isn't the investment skills that often trip you up, but it is the more operational things which are actually quite easily risk managed. And so we've long developed programs in which we support women to do the obvious boring things so they can go off and do the amazing things which they are very much capable of.
Thank you, Helene. So, we discussed the issue, the historical bias that exists, current situations, and what women entrepreneurs and women businesses that are going through access to finance, capacity issues, and so on. But I want to focus also on specific on-the-ground work that is happening that may not necessarily be visible for some of our audiences or folks that may see this webinar afterwards. So I want to really bring to light the work that you all are doing, specific work that people can really see the impact and how it's really changing and shifting this narrative from talking about the problem to really effectively putting in solutions. So Alex, if I may come to you, how is AFOA working on to create more effective financial models? And if you can share and prioritize women entrepreneurs, and if you can share real-time case studies that you've worked on that really addresses women entrepreneurs and scaling their business.
No, thanks so much, Yamsira. I think we have so many examples, given that we're now 4 years into this business across the continent. Maybe I'll focus on the Southern African region. We've delivered products. I'll give an example in Zambia with the leading bank, Zanaco, where we worked with them to develop a broad basket of financial, non-financial solutions. Actually, this product is called Z Women's Product. And it doesn't only provide collateralized free loans, but it provides mentorship, business management skills, networking opportunities. And today I can report that I think they're banking over 100,000 small and medium businesses. They've been able to mobilize up to $10 million in financing for women SMEs as a result of understanding that market segment and designing products that can serve that market segment. We've seen financial institutions in South Africa now come up with sustainability investment frameworks, and they're raising capital resources to address not only are they raising green bonds, but they're raising now social bonds that address gender issues and other social issues that for instance, have youth and women underserved. So we've worked with the banks in this market in South Africa and subscribed to the bonds that they've issued and publicly listed. And out of that, we're looking at providing affordable housing to first-time female-led households. We're providing access to finance in excess of $75 million to women SMEs. We also working with fintechs in the region. Want now, beyond providing short-term financing solutions on mobile phones, we are now providing overdrafts, a bit of term loans, maybe 6 to 12 months, that can address the needs of SMEs through a digital financial solution. But that's more on the finance side. But on the technical assistance, we've also supported women. We have a Women Entrepreneurship Enablers Initiative, and we've worked with 16 business development firms that have a focus on building the capacity for women SMEs. And we've worked in 26 countries. Over the past 2 years, 16,000 women have benefited from this Women Enablers Entrepreneurship Initiative that prepares them and then links them to opportunities, not only in banking, but markets, skills, and also integrates them in some of these global supply chains where they're lacking. So it's a progress. It doesn't mean that we haven't had challenges. Adiola mentioned some of the challenges that we face, that women face in specific sectors. I mean, for example, in the energy sector, we've struggled to get women participate in some of those sectors because of the gender stereotypes, the lack of leadership, the lack of mentors in that space, and also the work-life demand, especially for women that have family responsibilities. There's been a challenge to get them into especially renewable energy projects. But that has not stopped us from working with the developers to see how we can now develop gender action plans to increase women in their projects, either as employees or as part of the supply chain. So, I mean, there are a number of examples on the continent, but
thank you. Thanks, Alex. Actually, speaking of sectors, Killian, what sectors show the most promises for women-led businesses in Africa? And how can investors position themselves to tap into these opportunities from an investor perspective, based on the data and research that Riskira has done? What's your kind of reflection on that?
So I don't think women's opportunities are largely sectorally driven. What I do say is that what we have seen is that women tend to focus in their investment thesis around how they shape their futures and their families' futures. So you often see investment thesis shaped around healthcare, shaped around education, has a lot of consideration for impacts, a lot of consideration for a forward-looking stability, businesses with long forward-looking futures and stability, including climate finance. I agree with Alex, it's been really difficult in terms of on the ground, getting engineering, if I can say, the engineering staff and the deal-making staff within the renewable energy sector. It's been difficult to get those numbers of women participating at those levels, to expand the numbers of women that are participating. But I think there is a big opportunity, and I do see women moving into that area, and I think that's a great move for us. But what I would say is, I don't think that the women opportunity is really sector specific. And I mean, I'd like to use an example that we have live in our portfolios at the moment, where we allocated capital to a female-led asset manager with not a specific mandate to allocate to female-owned businesses specifically, but because the way in which they look at the world and the way in which they look at female founders and female-led businesses, they chose to invest in a business which is female-led and actually led by a female engineer, and which does amazing technology using LiDAR that enables agricultural productivity and efficiency. And since the investment has gone in and there's been support given by the PE firms, which is really their area of expertise, in highlighting and helping to grow these businesses and then highlighting them for exit, suddenly this is everybody's favorite company, and we see, you know, investors piling in and seeing women for what they are, which is, you know, an amazing CEO doing something amazing in a really much needed sector. And in some ways, the noise of it being a female founder then just fades away, which is exactly where we want to be in the end. You know, it's just a matter of getting that one step up and one person to recognize, you know, that there's an amazing opportunity here and move it forward. What I also find interesting about it is that in that particular business, they then also have a graduate program, which again is not specifically for females, but you know, when I went to visit the business, you could see that at least 50% of the students coming in, the engineering students coming through, were female. And I think that is, you know, that is part of how we would build a future where it's not just about, you know, female investment. It is about building a different ecosystem. But in terms of sectors, I don't think it is that sector specific, but I do think there are a couple of opportunities, you know, being climate and then healthcare and education. I think all three have proven to be good opportunities in terms of female-led fund managers.
Thanks, Elaine. I really like what you said, to really move away from this agenda of let's invest in women is really to make it inclusive into the ecosystem, right? We provide opportunities for the whole entire investment and finance ecosystem where women are active participants. So I really like that idea. And going to Adiola, I want to know how BII, along with other G7 DFIs, is working to enhance investment in women-led funds. Helian mentioned some of the fund managers that they've looked at and are investing in. I want to know from a DFI perspective, how are you working to intentionally enhance investing in women-led funds?
Thanks, Yipsira. I think for us, I mean, if you dial it back to 2018, British International Investments were the sponsors of what we call the 2X Challenge. And what we were trying to do with that initiative was to mobilize capital alongside with other DFIs, the G7 DFIs. What we were trying to do with the 2X Challenge was to mobilize capital specifically to advance women as entrepreneurs. We saw that the gap was there. You shared at the beginning of this session what the statistics look like, that there's a funding gap. So we realizing that sponsored the 2X Challenge in order to advance women as entrepreneurs, women as business leaders, women as employers, women as consumers of products and services that would enhance overall economic participation. And internally as BI, we've also committed a target of about 25% of our portfolio to be based on gender smart investing. And this translates to us investing through a gender lens. We want to intentionally address gender issues and promote gender equity as best as we can. And to help us to do this, we did set a criteria at how do we identify gender lens opportunities? How do we get our investee companies, our pipeline companies towards being investment ready for gender lens investment? And we did the criteria by setting up and saying that businesses that are 51% owned by women or founded by women, businesses that have women that represent at least 30% of the leadership or the board, and businesses that have 30 to 50% in the workforce or design at least that's between 30 to 50% of their products and services are designed specifically for women. So by focusing on these 4 key themes, which is along the lines of supporting women's leadership, job equality for women, promoting access to finance and entrepreneurship, and applying a gender lens products and services, we're able to intentionally address how to narrow this funding gap. And beyond that, beyond the funding as well, we also recently launched what we call our gender toolkits. And that goes to some of the comments that Alex had made earlier on regarding impact bonds and impact bonds. So whether the impact bond is driving inclusion by promoting more gender opportunities, we launched a gender toolkit, whereas investors, asset allocators can tap into this toolkit and look for how to curate opportunities or impact bonds that are specifically targeted to women-owned businesses, women-led businesses. So that's how, those are some of the ways BI is trying to address this funding gap and also support female fund managers.
Great, thank you so much, Adiola. And for us to kind of to see specific work that BII is doing, if you can give us an example, a specific case study in a specific country, so our audience feels and understands the work that you're doing really on the ground with real people. I think that would be great if you can.
Thanks. So just to reflect back on, I think a little bit macro before we get micro to specific case study. Nigeria, I'm going to use Nigeria as a specific country. The GDP of Nigeria could easily increase by about $200 billion if women were able to participate in the economy at the same level commensurate to men, right? The economy could increase by at least the GDP could increase by $200 billion. And in British International Investment, what we've done is, since we launched the 2X Challenge, we have committed about $400 million in 2X qualified investments to Nigeria since 2018. And one of the ones that I can just speak as a case study to very briefly is with one of the tier 1 banks in Nigeria. This tier 1 bank in Nigeria, where we committed $100 million to this financial institution, and we targeted 30% of this funding to be directed towards women-owned businesses, women-led businesses, and also to SMEs. And the idea is that working with this financial institution, which has one of the largest networks within Nigeria, with a branch in almost every local government, gives us that platform to be able to address a wider pool of females within the economy, with the aim that supporting this woman could actually add up to that $200 billion increase in the overall GDP of the economy. So that's just one case study. There's another investment in a tech-enabled business. And what that tech-enabled business does is that we supported that tech-enabled business with equity and debt, 2 products. And the whole idea is, with our support, they're able to expand their reach to the businesses that they support. They support some people that are in the low income. They support low income retailers in Nigeria. And the idea of our investment is supposed to enhance the economic opportunities for these low income retailers, which majority are women. So by that tech-enabled platform, women within the FMCG sector are able to ride on the back of that platform in order to enhance economic opportunities for them. So those are just some of the investments that we've done with Nigeria as a case study.
Thank you so much, Adiola. This really brings to perspective the high-level discussions that we had, identifying the problem and looking at the programs that you each individual are running within your organizations, and really bring it down to the ground so our folks can understand what real impact and real how you're touching the people on the ground. So I can't help it but think, we're talking about these great initiatives, investments, really good sizable investments that you are making, and making sure that you're intentional about providing finance, providing technical assistance, capacity building to women across the continent. But I want to know as well, and here, this is me kind of pushing the envelope a little bit more, but I want to know, where do you think could be done a little bit more for us to say that, we're getting there? Because the discussions we're having, I kind of sense like there is still, a lot of room for us to grow in this space. So Alex, with the man on the panel, I want to start with AFOA and the great work that you're doing and the story that you've told us. I want to know, where do you see room for growth? Where do you see AFOA pushing it a little bit further to really get to the level of, okay, we're making real tangible progress in the time and point we're in right now?
Oh, thank you. You see, there are a lot of inefficiencies in the market spectrum, and a lot has to be addressed right from policy, supply side, and demand side. I mean, with the exception of South Africa, we have very shallow. I mean, the financial depth on the rest of the continent is evident. We only have your traditional commercial banks or microfinance institutions and a few insurance or wealth companies that can be accessible. And the market is fragmented. It's a challenge for some of these SMEs to access these markets. And we also lack market development initiatives, your crowdfunding, VC, or equity funding, or insurance, and any other sophisticated credit products are really lacking in the rest of the markets. And I think there's a lot that has to be done at policy level to ensure that we benefit from. I mean, we push for some of these market development initiatives to come out through improved regulation or reforms that can drive alternative sources of funding for SMEs to access. The other challenge is on informality. I mean, the statistics say 53% of all the businesses in Africa are owned by women, but up to more than 70% of that informal. And that's a constraint for them to start accessing financing opportunities. A lot has to be done in supporting the transitioning from informal to formal. And we're seeing opportunities in the digital space that can support that or address that constraint that we're facing. But still also on the supply side, I mean, it's ironical, you will hear that the SMEs, the drivers of growth in most of the markets or most of the economies. But when it comes to the regulator, the risk that is attached to the SME financing is not the same that you'll attach to your large or global multinationals. So however much you're trying to push the financial institutions to go and serve this market, you're restricting them on the other side and telling them you have to provide more if you're going to serve this market. So some of the policy discussions we need to have in trying to see how we can push and increase more access to finance for the women SMEs.
Thank you so much, Alex. I want to take the same question to Helian.
Thank you. I think for us, the vision that we have, and which we were lucky enough for some of the most amazing women on the continent to originally help to incubate AWIF's vision, is to create a consistent platform of capital, so that it's not about just people who may be fundraising at this moment, which we're able to allocate capital to, but also in 5 years' time and 10 years' time, that we keep this particular project rolling, and we can finally get to the point where we have a consistent platform where female fund managers know that if they put a proposal that makes sense from a risk and return point of view and with sufficient skill and knowledge forward, that it will be heard fairly by people who want to allocate capital to women, but also that there is support for female fund managers if and where needed from a operational point of view. And so really our view is that what we want a consistent and lasting platform for that, in order to get a more lasting impact and change. For us, we have deployed capital sort of in geographic specific mandates, but we're busy trying to finalize a commingled mandate, which really allows us to roll it out over all geographies on the continent, and really looking forward to that.
Thank you so much, Helian. Adiola.
Thanks, Helen. I mean, I'm going to go back to some of the comments that both Alex and Helen had made at some point during this conversation. And the primary one is really around supporting more female fund managers. Helen had mentioned that statistics have shown that female fund managers are 3 times more likely to invest in female CEOs. They are 2 times more likely to invest in female-owned businesses. So supporting more of these female fund managers will catalyze and give us that multiplier effect. And from a capacity constraint, also addressing that capacity gap by supporting initiatives such as, there's an initiative called Boardroom Africa, which does some sort of technical capacity building for Black female leaders to sit across Africa. They've done that by placing about 600 Black women in in companies across the breadth of Africa. So supporting initiatives like that. And the final one is we need to tell more of the success stories. I think in this room, in this webinar, we can all reel off the statistics about the funding gap, but we need to share more of the success stories of gender lens investing. And by us highlighting those success stories, getting existing fund managers to make these reports more available, more publicly available, whether it's a deficit, whether it's a performance, the same way they report the performance on their funds, they should also report performance with regards gender lens investment. I think if we can triage these 3, we would be able to have more, we'll be able to have that catalytic impact in terms of closing that funding gap.
Thank you so much. I really appreciate your insights and examples that you've provided, and real tangible information that you've given our audience. There are a few questions from our audience, and our participants. Feel free to put in questions if you do have a question for our panelists. We have a few that we've received, and if you allow me to direct those questions, just a couple of them, and while we receive more questions. So I think one of them, Adiola, you kind of touched on it, but one question is, how do international investors, US and other investors, learn about these companies and these opportunities? Our participants feel like they're very limited perceptions, for example, for US investors, about investing in African companies. So where do they go about to find and learn more about opportunities that exist?
Okay, thanks, Yusiro. I think this question depends on where most likely where the investor is sitting, where the institutional investor is sitting in terms of the stage of investment. For early stage investors, I would recommend partnerships and collaborations with incubators, accelerator companies, and you have quite a few of them across the continent. So identifying the right type of, so assuming it's an early stage investor that is US based, that wants to invest within that VC ecosystem, should look as to how they can partner with incubators, with incubator programs, with accelerator programs, and also how to partner with existing venture capital fund managers. Because what happens with those venture capital fund managers is that they provide you a platform where you can now address that financial intermediation. They have a pipeline of, let's say, 200 odd companies. They apply their filtering process, and after going through that filtering and funnel process, they whittle it down to like 20 companies that they think align with the strategy. So depending on the investment strategy of the US company, depending on the stage at which the US company wants to invest in. But I know now for the purpose of this conversation, I've emphasized more on early stage type investments. So that would be one of the ways I would recommend.
Thank you so much, Adiola. And the other way around, how do women businesses in Africa, how do they find you? How do they go about finding these solutions, supports, and initiatives that will help them unlock capital, that would help them get a technical assistance or capacity building assistance? If I may ask, Alex, how would they find you and your services?
Yeah, so since we have a Pan-African focus, we have regional representatives in the different regions on the continent where we can be reached. I'm happy to share contacts and a general email that can be that you can send a request to see how we can support you and provide the linkages, be it finance linkages or capacity building opportunities. We're happy to support you. So I could type it in the chat there, and we look forward to receiving requests from the different stakeholders that would be willing to partner with us or would want support from the FAWA initiative.
Great, thank you. Helian, from your perspective, I know you work a lot with women fund managers across the continent. If you can tell our women fund manager on the webinar attending, how will they find the services and supports that Rescura has, and in partnership with other partners as well?
So our lead sponsor for the AWIF project is actually Standard Bank, but the AWIF project itself has its own website, and there is both the investment vehicle, which, as I say, the general commingled pool, which we're currently fundraising for, where if you are a female fund manager, we'd love to talk to you. You know, we always want to be aware of everybody that's on the currently in the ecosystem. But there's also available working capital support from the foundation. And so I think there's also some capacity building that can happen. And so I think from that point of view, you know, please get in touch. It would be great to do that. But I think from an investor point of view, I do really think it depends on at what level you want to be invested. So if you're investing in companies, I think Adiola's advice is really good in terms of getting to accelerators or finding an investment partner in an investment fund. I think if you're an institutional investor looking to invest into the continent, I think it's best to find advisors which are experts on the continent. And so, you know, my advice would be to make sure that whoever is helping you and advising you and giving you strategic advice also has significant expertise in Africa.
Thank you, Lillian. And I want to also give Adiola a chance to tell us how people would work with BII on the continent.
So with BI, I would recommend, you reach out to us. I'm happy to post our details where you can reach out to us, share your investment proposal with us. We'll be able to walk you through our investment strategy, walk you through how we invest, and also, apply different products, whether it's the technical assistance that we feel should be the best inroad into the conversation, whether it's in terms of market shaping. I'm happy to drop in our details. But one thing I should also highlight is that from a strategy alignment, there are specific sectors that BII would like to support, and those sectors are in line with developmental impact goals. And those sectors are in line in terms of healthcare services, healthcare distribution, food and agri, business services, and also femtech, just to mention a few of them. So yes, I'm going to send our details, so please feel free to reach out to us and get in touch with us. Let's look at your proposal and give you our feedback.
Thank you so much. Thank you. As we wrap up today's discussion, one thing is clear. Investing in women is not just the right thing to do, it is the smart thing to do. We've talked about the barriers, the biases, and the systemic gaps that continue to hold women-led businesses back. But we've also heard about the opportunities and the numbers that prove women-led investments drive strong returns, the initiatives that are working, and the growing momentum for change. So now the challenge before us is not about why we should invest in women. We have the data, we have the proof. The challenge is how quickly we move from commitment to action. To the investors in the room, what is stopping you from shifting more capital into high-performing women-led businesses and funds? To financial institutions, how will you redesign your product and policies to ensure women entrepreneurs get the capital they need, not just at the margins, but at scale? And all of us, how do we hold ourselves accountable to ensure that gender lens investing is not a trend, but a fundamental business strategy? We can no longer afford to let unconscious bias dictate capital flows. Capital flow, as we said, follows return. So the numbers don't lie. It's time to back what works. It's time to move beyond good intentions and drive real financial outcomes. With that, I want to thank our incredible panelists for their insights, our audience for your engagements, and our partners for continuing to champion this critical conversation. Standard Bank is the partner for this webinar series that will go throughout the year. Let's take today's discussion forward and turn it into action. Find the panelists on LinkedIn, connect with them, send them messages and inquiries, and let's move this conversation forward to real actionable items. I really thank you for your time, and hopefully we'll see you on our next webinar series, and have a wonderful evening and day. Thank you.
Thank you.
Thank you, everyone.
Thank you all so much.